5 things I would never do while getting pre-approved as a mortgage professional. Number 1, work with a big bank or a big credit union in my area. Why? Because especially if you're using a government loan, FHA, VA, USDA, that's not necessarily their sandbox or what they're good at. If you're using a government loan through them, if they do even offer a government loan, you're going to run into some troubles there with the timelines, just headaches and turbulence in general. Also, if you're self-employed, using a big bank or a credit union might not be your wheelhouse or the way you want to go. Closing on time. If you want to close on time, using a big bank or a credit union most likely may not be the best way to go. Retail lender, maybe not so much. Broker, yes, absolutely. Mortgage broker, fastest closer in the business. Second, do not co-sign on a loan for anybody, family or not, within 12 months prior to you purchasing your own home. The reason for this is because if you co-sign within that period of 12 months, you are liable for that monthly payment no matter what when you go to purchase your home. However, if you do it 12 months or longer before when you go to buy a home, you can show using bank statements or however you can prove it via documentation that the person you co-sign for has been making the payment on that mortgage for the last 12 months every single month, and you have not paid a single penny of it in any of those 12 months previous. So if you can do it 12 months beforehand, go ahead and co-sign for your son or daughter or whoever. But if it's within 12 months of you pulling the trigger on your own home, don't do it. Third, don't shop using sale price. Almost every home buyer out there makes the mistake of shopping using the sale price. You're pre-approved for $350,000. Okay, so you shop around looking for houses valued from $325 to $350, maybe even $375 if you want to pull the trigger for a little bit higher. But that's not the way to go, guys, because if you look at it, you might be comfortable with a $2,000 a month mortgage payment, but if you're pre-approved for $450,000, $500,000, that's certainly not going to be a $2,000 a month mortgage payment. So just because you can afford to go as high as $500,000 sale price doesn't mean your comfort level with the monthly payment will be there. So look at the monthly payment, ask your local loan officer or your lender what your monthly payment would be at the sale price that you're pre-approved for, and use the monthly payment to shop around at different properties, because any loan officer can provide you with estimated payments on particular properties, and that's what I do for clients too. So if they have interest in a property, I'll say send me the address, I'll provide you with the estimated monthly payment for that property and that sale price. So easy peasy. 4, don't trust entities and sources like Credit Karma. I can't tell you enough how many times I get clients that are taking an application, they say their credit score is around 750, they monitor it with Credit Karma, and ultimately their score comes in at, 620 or 680. It's typically within 100 points, high or low, but within 100 points, high or low, guys, of your credit score, which makes or breaks your interest rate, your qualifying ability, your monthly pay. It's everything with regard to obtaining a mortgage loan. So using a source that's accurate is absolutely in your best interest, and using a source that's completely inaccurate, like a Credit Karma, not going to be good, because it just gives you false expectations and you're going to be expecting things that aren't going to happen. So the 5th and final tip, guys, for anybody out there thinking about being pre-approved to buy a new house is make sure you look at the amount of volume that the individual you're going to be working with has done and closed within the last 12 months. Either real estate agent or loan officer, guys. We're in a constantly changing market here in the real estate market and mortgage lending worlds. There's always new regulations, guidelines, overlays to adhere to and to know and be knowledgeable on. And if they're not doing a lot of business, they may not know those things, which would lead to more trouble and more turbulence for you. So make sure whoever you're working with as a real estate agent or loan officer knows what they're doing and has closed transactions and does a steady amount of volume every month so that they can best serve you.